Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, January the 25th, 2022. Interesting trading day again today. Volatility remained. We did get plenty of downside action, which produced a lot of really great trading scenarios. And then the market tried to do the same thing that it did yesterday and doing a reversal and beginning to run up. Now, while this was going on, I had earlier put the minute 4 at yesterday's high, closing high at 14,524, and was thinking, okay, we're going to head down and now start to form the minute 5th wave. But then as it ended up being 3 waves down, right, as best as I can see, this is a ABC down, it just really raced up, breaking several levels in terms of whether it would have been more of a 5-wave structure down, leaving it as a 3, running up, and then collapsing again. And now the NASDAQ is clocking in at down 523 to 525 points after Microsoft reported earnings and immediately dropped $10. And now during the conference call, it is down an additional 5. So it's down 15 from the close, which is already down almost 8. So we continue to see the earnings coming out in our tech giants. They beat the estimate, but then the forward guidance is kicking it lower. And if this is the pattern, the NASDAQ is just going to continue to move lower. And one thing that I could possibly do here is take a look at this as an ABC and put that 4 over here. And this ends up being a very large failure to go back up and move above 14,522. So the resistance level that I really was looking for was 14,586. Possibly as high as 858, but it got stuck below resistance at 14,410, 411. And it only really got to 14,400. And it stalled and it reversed. And now we're dropping below 14,000. So this is a very interesting scenario. And the market is either really demonstrating extreme weakness, and this was just a folly of whatever, they came in, they bought it, and they bought it with strength. They took the Dow cash market was up 200 points. After being down 400, they reversed it, it was up 200. The Russell went from being down 70 to being, I think it was like just above green. So it was like maybe up 1 or 2. It's finishing down now and adding to those losses. So it is kind of was interesting that the same scenario that unfolded yesterday, but with much greater force and power, was attempted again today. And it failed. And it failed pretty severely by my book. And that tells us weakness. So I am expecting this minute 5th wave to continue and to likely start to pick up some steam, because as best as I can now consider this is 1 of 5, 2 of 5, and we're dropping in a 3 of 5. So that does cover us, and I'm going to try to open this up even more so that we can see it. That does cover the intensity of this move as we slide lower. In fact, at best, this could be, it is the 3rd. So again, 4, and then this would be 1. Very difficult to count because I did this before and I'm like, wow, it still is this drop, 3-wave drop. So it's an ABC. So either this 5th wave down is going to really form a triangle, but if that's the case, everything is 3s. So the wave 1 would be a 3, wave 2 is a 3, wave 3 would be a 3, and it needs to wedge to a point. And I don't see that forming just yet, but again, it's kind of early in the move in terms of, you know, what we were looking for. And so I'm gonna have to stick with that we're inside that minute fifth wave. Additional downside is needed before it is complete. The fifth wave would be expected to drop below 13,706, which is the current low and the low for minute 3, on its way down to actual first support for this leg down comes in at 13,645. Now let me just take this back up so I can show you the rest of how this Fibonacci is working. What I have now done is, first of all, I ran the large Fibonacci, and that covered the third wave, connected that to wave 4. So in essence, to do the extensions for wave 5, the comparison is to wave 3. Well, there's the beginning of wave 3. So that's where I run it down. I connect it to the bottom of wave 3, run it up to the top of wave 4, and that gives us projections for an extension of wave 5. So what it crossed over just as before I was getting ready to come on and make the update was the 0.236. So this is the 0.236 where wave 5 is equal to 236 of wave 3. It's just a resting point, and it has no real bearing on what I expect from this wave. So next up, this one down here below at 13,645 is the 382. Now, once we start moving into new lows for the sequence, we have the 50% support at 13,374. That's a candidate. But remember, once we drop under 13,706, we're again into a black hole. We go back to, this time we need to go back to May of last year to find price support. So June, May, that's the window that we're gonna have to find the price support. And it was all in a very strong rally phase. Now, 618, that is a very common Fibonacci relationship between fifth waves and third waves. That comes in at 13,102, but this can get serious. This can really start to show some serious dumping. And what we then start to look for, right? We already now know that wave 3 is the longest wave. So if anything, if wave 5 comes in greater than wave 3, then we're seriously looking for some serious downside. And again, it would break that no break zone that I've made reference to. And that, I have to go out to my weekly chart. No, the daily should show it. Let me go out to the daily. Nope. Wow. I have to go out to the weekly chart to show you what I want to show you, where wave 1 is. If this is a minor 4, it cannot cross over into the price territory of intermediate. If this is intermediate 4, it can't cross over to the price territory of the intermediate 1. They cannot overlap because wave 4 corrects wave 3. So drifting off and dropping into the price territory of 1, it's no longer correcting wave 3. So therefore, I'd have to change the count. And this is now coming into play. We are getting some serious downside action where the pressure is to sell. People are now looking to get out. That failure today to move to a new high above what we did yesterday, that to me is a major sign. It stopped and it turned. And when that NASDAQ started to turn, it was wave after wave after wave of sells. So this is the picture. I will continue to look at this as an intermediate 4th wave, unless we break below that 12,000 odd level down below. But here, now I'm on the 4-hour chart. I'm going to continue to look at this. If it comes down and bottoms here, bottoms at 618, it's not healthy necessarily, but it's going to hold together to allow a much stronger rally to ensue. If it starts to break these levels and breaks down here, then it is over. This gets moved back to here. The 4 gets this intermediate 4, we get moved over to here. This would become intermediate wave 5. That would be the high of the high of the high. And we are in 1, 2, 3, 4, 5. It would turn into, in my opinion, the first 5 waves down on a minor level. The same count that I'm using in the S&P would be put into place here. So we're at that juncture where if we have additional serious damage being done due to earnings reports, I mean, this was the first, Microsoft. We still kind of got Amazon, Apple, AMD, Google, Facebook, NVIDIA, PayPal, Tesla. We tried to rally Tesla today too. So there's still a lot to come. And then tomorrow, we have the Fed meeting results. We have the Fed chair giving us his press conference. He could put out some negative words. He could really rattle the cages of any hope of this rally, of any rally taking hold and bringing us back to this sense of greatness in terms of the market is so wonderful. Now, again, mindset, folks, it's going to turn into mindset here. Having a mindset of I can only think of bullish things, it's going to destroy you. Having a mindset that I'm trading what's in front of me and I'm going to follow the price action and I'm going to act accordingly will earn you a bundle of money. Your trading will improve. Your trading will be trading what's going on now and not really placing a worry or a care on why it's happening or why people are bullish or bearish or why the sellers are getting really intense. If I follow the technical picture, you will continue to make money. I continue to make money. My trading has really improving my mindset has done nothing but improve my trading. I block out the noise. So I'm just kind of going with what is trading in front of me. I'm just kind of going on, these are the moves. This is what's happening. So again, what did I just do? Oh, took up the wrong thing and I don't want any of that. Okay, so here's the 4-hour chart. Again, I'm going to open this up and we got a little bit more going on here. We are continuing to walk down, walk down, walk down here. Now, so the next support, 13,706 down to 13. Oh, man, gotta take it back. Sorry, folks. If I can't read it, you definitely can't read it. So let's get this into a position where we can all see it. Yeah, let's open it. Let's try that again and open it up even more. There we go. See, look at that. We got 2 hours of strong downside action and they're continuing to push. All right. So if this is wave 3 of 5, it should break that low at 13,706. Support underneath it comes in at 13,645. Then we have a little bit of a black hole, but we got a saving grace right in between at 13,374. The 618, which could finish it, comes in at 13,102. But if that's just finishing the third, then we got a fourth and a fifth. Underneath all that, we have the 618 for the minor, excuse me, for the intermediate wave 4, which may not be valid anymore at 12,955. Then we have 12,902. That's for this fifth wave. Then we have 12,715, and then the 100% is at 12,223. That is an additional 1,700 points from where we are. So this could get real ugly real fast. I'm not necessarily expecting it, but if I don't lay it out as a potential possibility, then I'm not doing anybody any service. Because if it starts to break down, we are already breaking below moving averages. I'm going to go out to the daily. We broke below that 200 several days ago. Then we get all this acceleration. The moving averages continue to point very strong down. In fact, what we see now, which I think contributed to some of this, was yesterday, was the 4 breaking below the 200. The 8 is sitting right above it. It's going to start, this is the daily, it's going to break below. The 20, the 50 are going to start heading strongly down. And if they break, this is truly way over. Now, I want to go out to the weekly because that's the next one where I got to check to see what is going on. The weekly 50 has been broken. That happened yesterday. We got back above it because there it is right there, 14,453. We got above it, we dropped back below it, we stayed below it, now we got another close below. That is a weekly negative picture for the NASDAQ. So I have no reason to feel that it's going to stop unless we get a turnaround. And similar to yesterday, but this time it truly can't stop. A bell, no bell, it can't stop. The follow through has to happen. We did not get follow through. So again, here we sit. Everyone wants to try to think what's going to make the market bullish. Well, to be honest with you, I don't really care. But if we wanted to go to that avenue, what's going to make the market bullish? We don't go to war in the Ukraine. The world does not go to war over the Ukraine. That everything simmers down and people back off their threats. But that is not looking very likely right now. So the globe is on, the world is on edge. We got that. In our own country, we have continued earnings reports. We have the Fed. We have a government that doesn't seem to want to function in terms of getting legislation passed. There are all kinds of things going on. So that's just going to add continued pressure. Now, how do you want to set your mindset? I have to figure that I got to block all that out, because if not, I'm going to be selling every single rally like there's no tomorrow. And that could blow out all accounts. You can't fight whatever they are intending to do. So continue with building a mindset to trade what's in front of you, understanding that we have some negative pictures. The weekly 200 is pretty far down there. So it's all the way down at 10,950. God help us if it got down there and started to break on this move. I don't see that. I pray that it doesn't, because then that's a serious crash. Back to the hourly chart. Here's what we're going to look for. We're going to look for continued downside. We just have our support levels. 13,102 possible finishing area. Might just be wave 3, then we got a 4 and a 5. So we're down into this zone, 12,954, 12,902, with a bottom side at 12,715 to 12,223. Those are in play. Not saying it's going to get touched. Please don't misunderstand. I am not saying this is where the market is going to go. I am showing you what comes into play as far as support. And Fibonacci extension support doesn't mean that that's where it's going. The possibility exists. The probability is picking up a little bit of, more probability on that probability scale. Right now, it's still at best 40-60. 40, maybe 2 at 60. No, not going to. Okay. So for tomorrow, that's what I'm looking for. Downside. Upside, I think, will continue to be very limited unless they attempt to pull another hat trick out there and just come in with buy orders like there's no tomorrow. Then we'll see it go back up, because until it breaks 13,706, this could remain a B wave. This is A of 4, B of 4, and we run back up just to, it's a flat. So in other words, it gets down to 706, turns around, races back up to 14,425.22, and it's a big flat for 4, and then we come down yet again. Okay, those are our scenarios. I'm going to leave it there. Next update will be on Wednesday, the 26th.